Imagine living in a country where the average person earns over $46,000 a year, where healthcare is largely taken care of, where education is subsidized, and where the social system is built to support you from childhood to retirement. Yet one of the most crucial elements of financial security is still often ignored: life insurance. Now picture this: you're walking through the charming streets of Paris or Lyon, enjoying a stable career, planning for your future, thinking that the French social system has you fully covered. But what if, in one unexpected moment, everything changed? What happens to your family, your financial responsibilities, your long-term plans? This video begins with a simple but powerful question. If you're living in France and earning around the average income, does life insurance truly matter? And if it does, how much is enough? This hook sets the stage for a deeper exploration of how income, financial planning, and life insurance intersect in one of Europe's strongest economies. France is known for its robust welfare system, but that doesn't replace the need for personal responsibility when it comes to long-term financial protection. Most people assume that government benefits and employer-provided coverage will be enough to secure their family's future. The truth is, these systems provide support, but they don't fully protect you against long-term financial gaps, the kind of gaps that appear when a primary earner is suddenly no longer there. This is why understanding personal finance within the French context becomes not just helpful, but essential. In a nation where the GDP per capita translates to roughly $46,000 annually, the average individual has greater purchasing power and more financial tools available than in many other countries. Yet with higher living costs, taxes, dependence, and financial goals like buying property or saving for retirement, even a solid income can be stretched thin without proper planning. That's where life insurance enters the picture. Many people think life insurance is simply a payout after death, but in France it goes far beyond that, especially with products like Assurance Vie, which serve as both protection and investment tools. Before diving into the complexities of policy types, premium structures, or financial strategies, we must first understand the world we are dealing with. A modern France, where personal income, lifestyle expenses, and financial priorities have changed dramatically. In this introduction, you'll begin to see how per capita income shapes financial behavior, how the French social system influences personal decisions, and why life insurance continues to play a vital role despite the presence of strong public benefits. By the end of this video, you'll not only understand how the average French income connects to personal finance choices, but also why every individual, regardless of their salary, needs to consider life insurance as a fundamental pillar of long-term financial stability. France's income structure is one of the most interesting in Europe because it blends strong social protections with a relatively high GDP per capita. When we talk about per capita income in France, we're essentially looking at the economic productivity of the country divided across its population, and in US dollar terms, that figure sits around the mid-40s. But this number can be misleading if taken at face value. It does not represent what every French citizen earns. Rather, it's a broad indicator of the country's economic health. On the individual level, people experience different income realities depending on where they live, what industry they work in, their education level, and their family situation. Beyond the raw numbers, the structure of income in France reveals interesting patterns about lifestyle and economic expectations. French households often rely heavily on stable salaries rather than freelance or gig-based income, which creates a predictable financial environment. This stability can be reassuring when planning for the future, but also means that many people do not aggressively seek out additional income sources. Another important factor is that taxation in France is higher compared to many countries, which means that even though the per capita income is strong, take-home pay may feel more modest. However, the trade-off is access to extensive public services that reduce the need for private spending on healthcare, education, and retirement. Because these systems are deeply integrated into everyday life, they shape how people approach financial planning. Many assume that since the government provides so much, private financial tools like life insurance are optional rather than essential. But the reality is that public systems are designed to offer support, not complete protection. Income ultimately drives the capacity to build wealth and safeguard loved ones. And understanding its limitations helps individuals recognize where personal responsibility begins. The more you understand about French income dynamics, the more intentional your financial decisions become. Income distribution in France tells a story that is often overlooked in financial discussions. While the average numbers appear stable, The reality is that income varies significantly across different economic groups. The top earners, those in corporate leadership, technology, finance, and specialized medical fields, enjoy comfortable lifestyles with considerable ability to save and invest. Meanwhile, median earners navigate a balance between meeting daily expenses and planning long-term goals. Lower-income households, often working in service industries, hospitality, retail, or manual labor, face a more challenging path toward financial security. These differences play a major role in life insurance decisions. Higher earners may opt for larger policies to protect their assets, cover future taxes, and secure their family's lifestyle. Middle-income families might focus on affordable term life policies designed to replace income and protect young children. Lower-income individuals may hesitate to purchase insurance at all, not realizing that a small, affordable plan could prevent a significant financial burden on their families. Inequality doesn't just influence how much people can save. It influences their perception of risk and their willingness to plan ahead. Understanding these gaps highlights why tailored life insurance solutions are necessary rather than one-size-fits-all approaches. Regional differences also shape the story of inequality in France. Paris and its surrounding region offer higher salaries but also come with much higher costs of living. Rent, transportation, childcare, and food all require careful budgeting. Meanwhile, rural regions or smaller cities provide more affordable lifestyles but often fewer high-paying job opportunities. This creates a financial mismatch. Some people earn more but spend more, while others earn less but live more comfortably. These dynamics influence how individuals think about future planning. A Paris-based professional might need a larger emergency fund to feel secure, and could view life insurance as an extra buffer in case of income disruption. Someone in a smaller town may prioritize long-term savings or property ownership instead. Additionally, as income inequality evolves, families across the income spectrum must rethink how to protect financial stability, especially during unexpected events. Life insurance becomes an equalizing tool because it offers guaranteed benefits regardless of social class. Whether someone earns €25,0 or €80,000, their family's financial future can be secured through strategic planning. Recognizing this connection helps individuals understand that life insurance isn't about wealth, it's about responsibility, foresight, and emotional protection. Personal finance in France operates differently from many countries due to the foundation of social programs. Healthcare is largely publicly funded, education is affordable, and retirement benefits are structured through a national pension system. While this can give people a sense of financial confidence, it can also create complacency. Many assume that because major expenses are covered, they don't need to actively plan for emergencies or long-term financial risks. But even in a strong welfare system, personal liability remains. A family might rely on one primary earner, and if that income suddenly disappears due to illness or death, public benefits will not be enough to replace the stability that income provided. Additionally, financial goals such as buying property, raising children, or building a comfortable retirement still require intentional saving strategies. French households commonly save a portion of their income, but many still lack structured long-term plans. This is where financial literacy becomes crucial, understanding how income, taxes, savings, and investments work together. Life insurance is not just an afterthought. It fills the gaps left by public systems and strengthens a household's financial foundation. It empowers families to take control of their future rather than relying solely on state support. Another important aspect of personal finance in France is that many people prioritize security over growth. They prefer savings accounts, government bonds, and low-risk investments. While these options are safe, they often offer limited long-term returns, especially when inflation rises. This cautious approach influences how people view life insurance. Rather than seeing it as part of a comprehensive financial plan, many treat it as a separate product, a necessary formality rather than a strategic tool. Yet life insurance in France, especially products like Assurance Vie, is actually one of the most powerful financial instruments available. It offers tax benefits, investment opportunities, and long-term flexibility. But the average household may not fully understand these advantages because financial education is not always emphasized. People are taught how to save, but not always how to plan. As a result, insurance decisions are often based on short-term thinking rather than long-term strategy. Understanding personal finance means recognizing that income alone does not secure your future. You need systems, protections, and tools to ensure financial resilience. Life insurance becomes one of those essential tools, bridging the gap between what the public system provides and what your family actually needs in times of uncertainty. Life insurance in France includes several unique options that make it different from insurance systems in other countries. The two primary categories are term life insurance and the highly popular product known as Assurance V. Term life insurance is straightforward. You pay regular premiums, and if the insured person passes away during the covered period, the beneficiaries receive a lump sum payment. This type of insurance is ideal for income replacement, protecting young families, and covering debts such as mortgages. On the other hand, Assurance V goes much deeper. It serves as both a savings tool and a financial protection instrument. Policyholders can invest their premiums in different funds, accumulate wealth over time, and receive tax advantages on long-term gains. It's commonly used for retirement planning, estate planning, and intergenerational wealth transfer. Many French households use Assurance VA as a core part of their financial portfolio, sometimes even more than traditional retirement savings. What makes these options powerful is their flexibility, but this also means individuals must choose based on personal goals. Understanding the differences helps families align their insurance choices with their income levels, financial priorities, and long-term aspirations. The purpose of life insurance in France extends far beyond simply creating a safety net in case of death. For many households, life insurance is a cornerstone of financial planning because it enables long-term security. For families with young children, it ensures that education, housing, and daily expenses can continue, even if the primary income earner is no longer present. For couples who have taken on a mortgage, it offers peace of mind that their home will remain safe and owned, even during hardship. For older individuals, life insurance becomes a way to transfer wealth efficiently, minimize taxes for future generations, and preserve assets. But one of the most powerful aspects of life insurance in France is its role in complementing the social system. While France provides healthcare, pensions, and unemployment benefits, these systems are not designed to replace personal financial planning. Life insurance fills the gaps left by public benefits, offering a personalized level of protection that adapts to each household's unique situation. It is a tool that empowers families to maintain stability, dignity, and long-term comfort. When viewed in this broader context, life insurance is not an expense, it's an investment in security. Determining how much life insurance you need in France depends heavily on your income, lifestyle, and responsibilities. A common guideline suggests choosing coverage that is 5 to 10 times your annual income, but this is only a starting point. A French worker earning the equivalent of $46,000 annually might consider a policy between $230,000 and $460,000 in coverage. But more precise calculations require looking at real financial commitments. Do you have young children who depend on your salary? Do you have a mortgage that your spouse would struggle to pay alone? Do you support aging parents or contribute financially to extended family? Each of these responsibilities increases the amount of coverage needed. Another key factor is future goals. If you want your children to attend university without financial stress, or if you want your partner to maintain your current standard of living, your policy should reflect that desire. Instead of thinking only about income replacement, think about lifestyle preservation. The right coverage doesn't just pay bills, it protects dreams, routines, and opportunities. And in a country with rising living costs, this becomes even more critical. The cost of life insurance in France varies widely, influenced by age, medical history, lifestyle, and the type of policy chosen. Younger individuals benefit from significantly lower premiums because they are considered lower risk. Someone in their 20s or 30s might secure a substantial coverage amount for a relatively affordable monthly cost. As individuals age, premiums rise due to increased risk factors, and medical evaluations may become more important. Smoking status, weight, and pre-existing conditions also influence pricing. Term life insurance tends to be more affordable because it only offers protection without investment benefits. Meanwhile, Assurance FI can require larger contributions since it functions as a long-term savings tool as well. Another factor is the length of the policy. A 20-year term will cost more than a 10-year term, but it offers more extended protection. When choosing a policy, it's essential to compare costs across providers and consider whether the premiums fit comfortably within your monthly budget. Life insurance should never create financial strain. Instead, it should strengthen your long-term security. Understanding the cost structure helps you make a responsible, sustainable decision that aligns with both your present income and future goals. Life insurance becomes even more powerful when combined with a broader personal finance strategy. Saving alone can provide some security, but savings can be depleted quickly during emergencies. Insurance provides guaranteed financial support when it is needed most, acting as a shield for your savings instead of a replacement. For example, if an unexpected death occurs, insurance pays the family's major expenses while savings remain intact for future needs. In France, assurance vie plays a significant role in this strategy because it integrates savings with protection. It allows individuals to accumulate wealth over time while maintaining insurance benefits. This dual-purpose tool helps families build long-term stability. When paired with regular savings, emergency funds, and retirement planning, insurance becomes part of a strong financial foundation. This approach ensures that no single financial tool carries all the responsibility. Each tool, savings, insurance, investments, works together to create balanced security. For French households living on an average income, such a strategy offers peace of mind and long-term predictability. Instead of relying solely on government programs or income, families create their own safety net. Another advantage of combining savings with life insurance is that it encourages long-term sinking. Savings alone may be influenced by short-term emotions or unexpected expenses. But insurance requires consistent commitment, which helps develop financial discipline. It creates a structure in which a portion of your income is automatically dedicated to your family's future. For many French households, this habit becomes the cornerstone of responsible financial behavior. Assurance vie allows individuals to choose between secure investment options or higher growth funds, depending on their goals and risk tolerance. Over time, this flexibility builds wealth in a controlled, tax-efficient manner. The key is coordination. Savings handle immediate needs, investments handle long-term growth, and insurance handles risk protection. Together, they form a complete financial ecosystem. This system is especially important for individuals with dependents or major financial responsibilities. Life insurance ensures that savings do not need to be drained during a crisis. And savings ensure that insurance is not the only source of security. The two tools complement each other, allowing families to navigate both everyday expenses and life's unexpected challenges. Imagine a typical French household. A couple living in a mid-sized city, earning the equivalent of $45,000 per year. With one child and a modest mortgage, their income supports a comfortable lifestyle, but not one without limitations. If the primary earner were suddenly unable to work or were no longer present, the family would face immediate financial pressure. Public programs might help temporarily, but they would not replace full income or long-term stability. This is where a strategic plan becomes essential. The household sets up a small emergency fund, contributes regularly to savings, and invests in assurance vie for long-term goals. They also choose a term life policy that covers 10 years of income, ensuring that the child's future and the family's home remain safe. This combination transforms their financial vulnerability into resilience. Life insurance acts as the foundation. Savings provide flexibility, and investments allow growth. Each element supports the others. Personal finance in France is not just about income, it's about how that income is managed, protected, and optimized. When all these pieces work together, families gain confidence, knowing that their financial future is secure, stable, and prepared for whatever life may bring. As we come to the end of this video, it's clear that personal finance in France is a unique blend of opportunity, stability, and responsibility. The country's strong welfare system provides a safety net, but true financial security comes from the choices each individual makes beyond what the government offers. Whether you're earning close to the average income or facing the challenges of rising living costs, your financial future ultimately depends on how well you prepare today. Life insurance is not just a formality. It is a pillar of protection that shields your loved ones from the uncertainties life may bring. When combined with smart saving habits, long-term financial planning, and income awareness, it forms a complete ecosystem of stability and growth. In France, tools like Assurance vie offer tremendous flexibility, allowing you to build wealth while safeguarding your family. No matter your income level or personal circumstances, you have the ability to create a secure financial future through thoughtful planning and intentional decision-making. As you reflect on everything VA explored, from income dynamics to insurance strategies, they've the next step in your financial journey. Evaluate your own needs, discuss options with a certified advisor, and choose the right plan to protect what matters most. Thank you for watching, and I hope this video inspires you to take control of your financial future with confidence and clarity.